Good morning. Today's topic is market participation issues for generating companies. In the last lectures, we have seen what is the role of GENCOs in pool markets and also in bilateral markets. We have seen that whether it is a pool market or whether it is an open access market, which includes both pool and bilateral transactions, there is always a problem for GENCO that it must speculate what is the demand so that they can place an optimal bid such that it is short listed. Now the question is, how do they predict the demands? How do they forecast the demands? Because if they forecast it properly based upon their available generation or installed capacity, they can place an optimal bid. So there is always a big task for the GENCOs to go with the forecasting mechanism. And there may be other issues also for GENCOs when they are placing their bids in pool markets. So in this video lecture, we will discuss about all these topics. I hope that by the end of this video lecture, you will be able to list the various complex issues which arise due to uncertainties in market prices. And I hope that you will be able to list the technical constraints associated with the unit operations, which are to be considered by the GENCOs when they are placing their bids. And also, I hope that by the end of this lecture, you will be able to describe the process involved in finalizing the bids by generating companies. So the contents are placed like this. I will start with a quick introduction about generating companies, and next the market participation issues of GENCOs, followed by the factors which are to be considered for desirable bidding strategies. And then we will look at the short-term operation planning activities of a GENCO when they are participating in trades, and we will also see what are the different steps which are to be followed when you are placing a bidding decision, finally followed by the forecasting of market prices, how they will be done. And coming to the introduction of this concept, we know that a GENCO, the basic function of a GENCO is that it has to meet the demand which it has already agreed when making bilateral contracts, and also regarding the trade for the next day in the pool markets. So GENCO is now supplying power to the already contracted parties through bilateral contracts, and again it has to trade some power through the pool. So GENCO has to make the decision about the amount of volume and the prices for both the categories. Maybe in bilateral contracts the volumes and prices are already decided, but it has to meet both these bilateral contracts and also the pool markets. Now, for these things, it has to schedule its generating units, and at the same time, it has to consider its price also. So that's why a careful optimization of generation is required for the GENCO all the time. And these particular scheduling and optimizing are a little bit complex issues for a GENCO all the time. Why? Because optimizing in generation is a very complex problem, because the market prices will be uncertain most of the times. Maybe the bilateral contracts prices, since they are fixed for a long time, they won't be varying. But when you are trading in a pool, there will be uncertainty in the market price depending upon the demand. And one more thing is that there are always technical constraints whenever you are trying to operate a particular unit. So these two issues are key problems for the GENCOs all the time. Apart from this, if we list out the issues of GENCOs, we will start with finding the dispatch and unit commitment decisions while maximizing the profits, because which units you are supposed to bring into commitment and how to dispatch the electrical power. At the same time, how to place an optimal bid, which is nothing but trading decisions such as market buy and sell. This is also one of the biggest problem which you will be facing. Apart from this, appropriate bidding strategies. So whether we want to buy or sell, and at what price. So these three are the issues which are there for the GENCO every day based upon their commitments. Literally speaking, these two can be clubbed into one thing, whereas this one is finding the optimal unit commitment, which we have already discussed in the course of PSOs. Now, having seen these things, when you are placing see, the third problem for us was finding appropriate bidding strategy in order to meeting both bilateral contracts and also the pool model. So when you are considering this desirable bidding strategy, what factors you should consider? The first thing is the complex interplay between the technical aspects. As already been said, there are always technical aspects. You do have multiple generators. You should be always aware about these technical constraints, such as what is the startup time for each of these units, what is the minimum run time, because some generators are supposed to run for minimum amount of time, without which they will become non-profitable. So you should know about your technical constraints, such as the limits of your generators, the minimum and maximum runtime, the ramping rates, etc. Apart from this, you should also think about the economic interests of the GENCO and also uncertainties associated with the market trading. This is completely depends upon the forecasts of the demand. So these three things are to be considered all the time whenever you are placing a proper bidding strategy. Your own technical constraints and your financial interests, and also the uncertainties associated with market trading. Now let's have a quick look about the short-term planning activities of GENCO when it is participating in electricity market trades. So first of all, how they will forecast the things and how they will place a proper bidding mechanism, that we will see here now. See, the first and foremost thing is it will take inputs. See, whatever the inputs which it will be taking, it will be taking the time series information on the market prices, and it will also take a weather forecast. It will help in forecasting the demand and also other information on the system conditions. So all these inputs will be taken, and these inputs will help in determining a proper price for day ahead market. So they will plan accordingly, they will identify the optimal price, and then this will be placed as a bid for day ahead markets. So here the price based unit commitment for next day to determine commitment and trading decisions. This is what we call it as a bid. So this will lead to hourly economic load dispatch to determine the optimum generation schedule and system marginal costs. So once you place the bid, then you make a decision on hourly economic load dispatch so that which generation units will be helpful. In most of the markets now, this unit commitment is taken care by the independent system operator. If it is not taken care, then you should decide on your own which units you are supposed to operate to maximize your profits. And once it is done, then you will place strategic bidding decisions for day ahead spot markets. This is a job which you will be doing. So first forecasting, and next is you will do your unit commitments, and next is you will do the hourly economic load dispatch, and then you place a proper bid in the markets. Now there are two questions now. If the bid is accepted, then no problem. We will do the entire thing. If it is not accepted in day ahead markets, or if the GENCOs has further generation available, let us suppose maybe not entire of your generation has not been shortlisted. You still have some more generation capacity which is not shortlisted. Then immediately what will you do? Then you go with bidding decision for a short-term markets, isn't it? So again you will plan all these things. Again you go with the price forecasting for short-term markets. The same things will again repeat. So this is the procedure what you will be doing if you are a GENCO. Now see the simple steps now. I have listed the steps. We will start with depending upon the spot market price. Depending upon the spot market price forecast model in use, the input to the models will be varied. However, the basic inputs to the price forecast model are, we have already seen, the past time series data of spot market prices and the next day's weather forecast. So these two are the primary things, and other relevant data also you can collect, and based upon that you will be forecasting the smart market prices. And using this information, what you will be doing? the hourly price forecast is obtained. Hourly price forecast is obtained, which is then fed into the GENCO unit commitment model. You will be having a program where you will be determining the unit commitments. The unit commitment module is specific to the GENCO. It will be varying with respect to each GENCO. And there are several constraints also, the financial and technical constraints. So all these things will be included here. So based upon this, you will be running a module, and this will give you the information on unit commitments. So once a unit commitment you receive, and so unit commitment and trading decisions are obtained, the next stage is nothing but you determine the bidding strategy. So then you will decide about what must be your bidding. So these bidding strategies again formulated using the inputs such as marginal costs at the evaluated operating schedule and price forecast information. So this is the procedure how you will place the bids. Now, as already said, if your bid is not selected, then you should go with the short-term trading. So all the markets, they do provide this flexibility of short-term trading, where the trading will be done for hour-to-hour basis. So in markets where there is a provision for short-term trading, the GENCOs need to forecast the short-term market prices also and formulate its short-term bids on an hour-to-hour basis. This is required if your bid is not shortlisted or if you still have any available capacity. So now the biggest question is the first step, how to forecast the market prices. Right? Even though everybody has a data of past prices and future demands, etc., then it is always it is a tedious task how to forecast the market prices. Now, every GENCO can be facing success only if it properly forecasts the market prices. So an important input to the decision making activities is a good forecast of the market prices, or in fact the demands. The price forecast refers to both day ahead markets or week ahead markets also, particularly the price in the spot market or the short term markets. Why this is so much important? Because an accurate forecast of the short term market price helps a GENCO to bid for power sell or buy appropriately and strategically, thereby providing higher returns of income. These forecasts will not affect the bilateral contracts. See, the bilateral contract prices also tend to be indirectly affected by the spot price trends, because if somebody is getting price at a very cheaper, then automatically what happens? They will cancel your bilateral contract markets and they will move to the pool markets. So a proper forecasting is to be maintained. But in particular, day ahead markets and week ahead markets are a little bit okay. But the short term markets, which are done on hour ahead basis, they can be highly volatile because there can be sudden outages. So, and there might be suddenly temperature variations, a summer season, sudden rise in temperature. So these may affect these short term markets. So on the whole, you will be efficient, you will get higher returns only if you carefully predict the things or forecast the things. Now, how the forecast is done? Normally, there are two different types of things, as you might have known about this. One is forward price, the other one is a future price. So, the price forecast in general sense also includes forecast of futures and forward market prices. So it is not only about expecting for tomorrow's or week ahead, it can be of forward and future prices also. Generally, these will be carried out for months and even years also in advance. So if you are capable of predicting the price of electricity, maybe 1 year ahead, then automatically you can plan for increasing of your generation capacity or varying your generation capacity or doing any market risk analysis or maintenance planning. So a proper prediction is always required, even at the farther end also. And there are various tools which are available for forecasting the market prices or in turn the market demands. Most common model employed is conventional linear regression analysis techniques, which are generally employed. Nowadays, artificial intelligence, neural networks, machine learning, deep learning, all they have come into picture. So these do help in forecasting the demands, electric demand for a longer period. So two basic approaches to price forecasting are used widely, as already said, the linear regression model based upon the So first thing is a statistical method that uses a time series analysis of past data of market prices in order to develop a model which can fairly be close to forecast the price for the next day. But the biggest problem is that estimating the parameters of this mathematical model based on historical data is a little bit tedious task. The other job is a simulation. Nowadays everybody is doing simulations, right? So develop a simulation model which can incorporate the generation dispatch patterns over a period of time. In either of these cases, your job must be to determine an appropriate or a good forecasting. Your job must be developing a good forecasting algorithm and a good forecasting program such that you can reap in the profits. So on the whole, what I want to say is that the GENCOs will be having so much complex issues and there will be so much technical constraints associated with unit operations. And you do need proper bidding strategies in order to improve your profits. And always an important input to the decision making activities of a GENCO is a good forecasting of the market prices. So I hope now you are able to list at least a few complex issues which arise from uncertainties in market prices. And also I hope that you are able to list the technical constraints which are associated with unit operations. And I hope that you are able to describe the process which is involved in finalizing the bids by GENCOs. So these are the lecture level questions. You should be able to identify the factors which are considered for desirable bidding strategy. And I hope that you will be able to explain in detail the procedure for placing the bids. This is a reference. You can go through the reference, get some additional information, and we'll discuss more in the class. Thank you.